discussion on how the Q3 earnings are impacting the market sentiment with our fund manager Aditya Iyer of Plus Delta Portfolios, and he'll be here to share with his views on how the recent results have panned out and how the viewers can take benefit out of this entire exercise. So it's going to be a very interesting and engaging discussion. So stay tuned in right till the end, because there is going to be a lot of information which is going to be shared with you. So with that, I welcome Aditya to this podcast and the live discussion where you will be actually getting to hear from his years of experience on the financial markets. So over to you.
Thank you so much, Raja, for inviting me to your show. I think the market will very keenly watch the Q3 earnings, because let's face it, we've not had meaningful earnings growth in the market for years now. I think 2018 was the seventh consecutive year of single-digit earnings growth, and any semblance of an earnings recovery coming in Q3, those stocks will be rewarded very generously by the market. In our PMS service Plus Delta portfolios, we have a multi-cap fund and a vision fund. We normally look for large caps in our vision fund, and the earnings outperformers for this quarter like WIPRO, RELIANCE, HEG and so on will form a vital part of our watch list. So we will be keeping a key eye on many stocks to invest in our PMS, and we are analyzing these quarters results very closely. So let's start off with WIPRO. Now WIPRO optically posted a decent set of numbers. The revenues were in line. They posted 2.4% quarter on quarter constant currency growth. The management had earlier indicated a guidance of between 2 and 3%. So at 2.4%, it's smack dab in the middle of the management's guidance. The operating margins came in higher, and the BFSI vertical performed well.
So all these things actually have started capturing in the prices quite early. And that's why we saw a fantastic breakout above 330 zone on the charts as well. And that's why the stock has moved really magnificently. And right now too, despite the market witnessing some hesitation, the stock is quite holding on. And it looks to be a good potential on the charts where it can go to move towards even 420. What is your opinion on that?
I agree, but I agree that short-term levers are in place, but I wouldn't read too much into these results now, because one, the beat in operating margins was mainly because of currency tailwinds, because forex gains contributed to almost 60 bips to the margin improvement. The second thing that really helped in boosting margins was a reversal of provisions from earlier years. And again, in terms of revenues, recently the company did an inorganic expansion where it did a deal with Alight. So Alight went in for 2 more months of consolidation. So the revenue that you're seeing is a consolidated revenue of Alight and WIPRO. If you take the consolidation aside, the constant currency growth would have been more in the range of 1.8%. So I think it's too early to be commenting on the earnings now. But yes, what we do like in WIPRO is the large cash pile that the company is sitting on, almost rupees 250 billion worth of cash, amounting to 16% of its market capitalization is lying on the books. The company may announce a buyback to reward its shareholders, and the announcement can come maybe before in March or April. So that should keep the stock active in the near term. But in terms of long-term triggers, we would still wait and track the stock for 1 more quarter before taking any decision there.
So this bonus issue which is they have declared, so that should augur well for the prices, right?
That should, definitely.
So in terms of investment, you think we should still wait, or you think it's a good trading bet but not an investment bet?
It is a good trading bet. In terms of investment, I think we should wait and monitor and work on the company more, because the recent guidance for Q4 has not been very upbeat. It's been between 0 to 2%.
So you're saying you'll take a while till you actually go forward and invest for your clients?
Absolutely.
All right. So which is the next stock which is coming up? It's the people's favorite, all-time favorite, which is Reliance. So Reliance has been, people have been waxing and waning between whether it's a telecom giant or whether it's a petroleum giant. Well, it is a changing demography and also a changing sphere for Reliance. And this stock has come out with stellar results, and the stock has given a fantastic breakout, and it's there for everyone to see. Well, should we be booking profits now for those who invested, or is it the right time to invest? So let's take a cue from Aditya on this. Aditya, why don't you give us?
Yes, Raja, Reliance has been going up every day, and I think for the past few days it's single-handedly taken the Nifty higher.
Very true.
The results were above market expectations. The gross refining margins were much ahead of estimates, and the biggest element in the result was the possibility of monetization of their telecom assets. Now, Reliance is coming out of a large capex regime, and some bit of easing off on capital expenditure can do well for the stock. But what is encouraging that Reliance has surprised the market with its numbers. That's what we need. We need more and more companies to beat estimates and post a surprise in terms of its quarterly financial performance, because in the end of the day, a surprise in margins is what gets momentum in the stock, and when you have growth and you have momentum together, that leads to a rally in the stock. And that is the core philosophy of our PMS service, the CGM model. We look for stocks that have growth, and we look for that growth to be accompanied with momentum. The growth aspects has been very well laid out in the results. I think coming to the momentum aspects, I saw the stock falling into a trendline support, and I saw some positive divergence on the RSI. You would want to comment on that?
Yeah, definitely. There is a divergence in the RSI, and a nice triangle breakout definitely challenges the high of around 1320 on Reliance. So, do you think that this breakout which we witnessed on the charts is signaling further traction to the upside, and 1320 will definitely be crossed in the near term?
Definitely, definitely. I think both revenue and profitability was ahead of estimates.
Yeah.
You earlier said whether Reliance is a telecom play or an oil and gas play. The oil and gas part of the business is definitely solid. 10,000 crores of quarterly profitability. How many companies in India can do that? And in terms of the telecom business, yes, the company has been managing that really well. I think personally, it's the only meaningful play left in the telecom sector in our markets, because Bharti Airtel is cash strapped, and Vodafone Idea is going the fundraising way. So I think what Reliance will do is it'll improve the profitability of Jio going forward, and eventually at a future date we will see a demerger and listing of the telecom business. So Reliance is very much still an oil and gas play for me.
Wow, that's a nice insight for our readers, and for those who are thinking about whether Reliance has moved up or whether it has risen to, it's a profit booking zone, please rethink. And now we go on to our third stock, which was the favorite or the darling from the mid-cap space in 2017, but not so in 2018. Well, that stock is HEG. It's been buzzing like anything in 2017, but 2018 has sometimes not given the kind of expected return which people wanted. There were many hands which have got burnt, and people are still considering it for an investment play. Well, let's on the charts, definitely it is indicating a double top, and the prices are definitely coming down. But let's see whether Aditya has a different opinion and whether our viewers want to invest in HEG. Aditya, what's your take on HEG, and whether it's the right time to invest in HEG?
So honestly, HEG has been falling for the past few days, and we've been hearing some news that there has been a 10 to 15% quarter-on-quarter correction in graphite electrode prices. Now, GE prices have been increasing constantly for 2 years, and this is the first time in 2 years that we are even hearing about a correction in prices. So that is definitely going to be noticed by the market. Secondly, there is some bit of uncertainty around the Iran export sanctions. HEG almost exports 10%, as in 10% of its annual volumes comes from Iran. So any impediment in terms of exporting to that country can have an impact on volumes. And
do you think that is happening right now? Because the prices are really not living up to the expectation.
Needle coke, which is a key input, prices of needle coke have started increasing, and that can have an impact in margins. So finally, the margin trajectory for HEG is certainly in threat for the coming 2-3 months, or sorry, 2-3 quarters, because of one, flat volumes, lower pricing, and higher costs.
Okay, so in a nutshell, you're saying that this is not a good time to invest, and should people, the viewers, consider booking profits now if they have made, or so? Well, it's a difficult scenario for those who are looking to invest into HEG, because this is not the right time to invest. But yes, those who have made profits should exit.
Should exit, and I think I would urge people to wait before building long positions again. Yes, the valuations do look attractive because of this fall, and there is some bit of normalcy returning to the counter, but 2 to 3 quarters of low margins does not excite me, and I would hold back.
And like our founder Dr. Narayan has always said, prices says everything. So currently the price is saying don't touch me. So that's what we would like to say and end this live discussion. I'm sure that you got some interesting insights on the three stocks which we discussed. One was WIPRO, second was RELIANCE, and third was HEG. More result updates will be coming up. This is a result season, and how important results are impacting the market sentiment, and how one should be looking at it from an investment perspective. That's what we'll be sharing with you in our next live discussion. Till then, thank you for watching, and thank you Aditya for joining me on this interesting discussion on our three stocks. So, thank you for coming in.
Thank you so much, Raja, once again for inviting me.